Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Lunchauskas. Today is the 24th of September 2018, so welcome everyone. Welcome to this Monday's morning session where we're going to have a look at the markets, what's happening with them right now, and actually what happened with them last week. So but before of course we go in, just wanted to quickly apologize for the absence of the videos in last week. We had a few technical issues here, but hopefully that's sorted now, so we're gonna get back on track. And yep, I hope we're not gonna have any more issues here. So but anyway, so before, of course, we jump into the charts, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so let's jump straight into the charts. Now the first one I want to touch on is the FTSE 100. Now the FTSE yesterday, as all the other last Friday, as all other indices had a good, fantastic day, and actually, to be honest, the whole week was very good for the indices last week as well. So certainly we saw all-time highs on the US markets, and well, actually this also gave a boost to the European markets as well. And we can see that specifically on the FTSE, we've managed to break and close below this key level here that I had highlighted, and that's around 74.30 line. This was marked here by this nice good support level seen on the 3rd and the 31st of the 3rd of September and the 31st of August. And of course we've managed to break this, and by the arrows here that you can see, this was the analysis done a while ago, and this is where I was talking about the potential reversal here. If we get a rejection around the 74.30, then we could see a reversal back to the downside. But because we had a strong break and a close above this level, above the 74.30, now this is looking, to be honest, quite promising for the FTSE, where we could aim initially for the 75.35 zone, resistance zone, of course. This one was marked here by the high of the 4th of September, and if that doesn't hold, well, it could be opening the path towards even higher levels like 76.35, or even actually going all the way here towards this downside resistance line taken from the peak of the 22nd of May. So for now, of course, be very careful here. You can see that last week the index, and judging by this daily chart, the index found good resistance near this 200 EMA here, shown as the black line. Of course, we do have the 50 EMA as well, shown as the red line, coinciding here with the 200 EMA. So this proved to be quite an important area here, the 74.90 approximately there. So further acceleration, like I said, further acceleration to the upside here, and a break of the 75.35 could open the path towards higher levels. Certainly, let's not exclude a possibility of having something like this here, where we could see maybe a reversal a little bit to the downside here, getting a nice bounce from the 74.30 and then pushing higher again. So something like this could be possible, of course, if, let's say, this gets a break here and we see a close below the 74.30. Now certainly be very cautious, because to be honest, for us to start looking at the downside, we would need to see this one sliding a little bit further to the downside and eventually breaking the 73.35 area approximately here. Now this way we could start positioning ourselves for lower levels again, maybe a possible move towards this kind of more of a longer term upside support line taken here from the low seen on the 9th of February. So keep your eyes on that one, of course, but to be honest, for now, now this is looking more positive than negative. Let's jump quickly into one commodity that I really wanted to touch on, and that's WTI. Now WTI had a boost, had a nice boost, and we're seeing this move higher here. We're breaking this key area of resistance at well, actually we broke it and closed above it, the 70.45. We also broke this other key area of resistance, this at 71.65, and now it seems that it wants to continue pushing higher. Certainly the next potential level to watch here could be this 74.75 mark, approximately here. Let me just quickly adjust. Sorry, I do apologize. The 74.90. Now that's the level to keep an eye on. There we go. And certainly, if that doesn't hold, well, I mean, this could become even more interesting for the bulls, and we could see them driving the commodity up towards the 77 level, and then of course maybe hitting this 77.70 mark approximately there. And if we're going to go back down here in history, we can see that this level here was marked by the highs that we saw here around the 20th or the 21st of November, around the 21st of November 2014. So very good potential area of resistance, but of course for that we would need to see initially a good nice break above the 74.90. On the downside, well, we do have this short-term upside support line running here, but to be honest, if we get a reversal, strong reversal back below the 70.45, and then eventually we get a break below this short-term upside support line, well, we could start aiming for a possible test of the 66.95 initially, and then maybe 64.45 here, marked by the low that we saw here on the 15th of August. So for now, of course, keep your eyes more on the upside, because at the moment this is looking more bullish than bearish. Looking at gold quickly, gold continues to sit here within this little range between the 1190 and the 1207, something like that, approximately there. Of course, certainly we're going to keep a close eye on this little range and wait until it actually breaks out of it before we kind of start examining any direction, either to the upside or the downside. But certainly for now, as you can see, also we are trading still below this downside resistance line taken from the peak of the 11th of April, and well, to be honest, for us to start examining higher levels, we would need to see a nice good break here and a close above this, well, actually not only above this downside resistance line, but also above the 1218 mark, approximately there. Now, as you can see here, the 1218 acted as a very good area of resistance here around the beginning of August, and a nice good close above that level could actually invite probably more bulls to the table, and we could see this one traveling higher initially, of course, maybe towards the 1235 mark here by the highs that we saw here and in the end of July, and then maybe going a little bit higher here towards this 1266 zone. On the downside, well, for us to start looking at the possible move lower again here, so we would need to see initially a nice good break below the 1190, and then of course a break below the 1183. Now this way we could probably see further declines here, and potentially we could start aiming for the 1160 mark here by the low that we saw here in August, so approximately the lowest point of August. So good potential area of support, but for that to see, we would need to see a good break here and a close below the 1183. Let's jump into actually one crypto quickly that I really wanted to touch on, and that's Ripple. Now, the Ripple is at a very interesting spot here. So looking at overall here on the bigger picture, we do have a break of this downwards moving resistance line taken from the peak of the 10th of February. So the crypto has managed to nicely break it to the upside. So yep, I do apologize for the amount of lines here, but I was looking at the 4-hour chart initially, and so now we can see that we've broke this downside resistance line. And of course the question here is, are we going to continue pushing higher? Because as you can see here on the 21st of September, which was Friday, we managed to reach the 0.79 level at one point on Friday, and certainly at the moment this is looking, to be honest, quite bullish, even though we are getting some signs of reversal, potential reversal. But to be honest, this could be seen just as a correction, as a possible correction, where initially, of course, we're going to keep a close eye on the 0.5220 level. Now we could see something like this. This could be a possibility here, where the crypto could drop a little bit lower here, bounce off of this 0.5220, and then push higher again towards the 0.7060 level. Now the 0.7060 level was marked here by the highs that we saw here around the 4th of June and also around the 20th of May. So very good potential area of resistance to keep an eye on. I understand that we broke that on Friday, but nevertheless, a good level to watch initially, because this is where the rate could stall and for a little bit before kind of the bulls and the bears decide who takes further control here at around this level. On the downside still, I mean, of course, if we get a break here and a close below the 0.5220, certainly not everything is lost for the bulls, because we could see a little drop here lower, maybe initially towards the 0.45 level, or even actually going back down to test the downside resistance line that I've just mentioned, and which could prove to be quite a nice bouncing ground for the crypto, from which it could potentially go higher again. I mean, this is the area where the bulls could take advantage of the lower price and yep, take this crypto even towards these higher levels here. For us to start examining the downside again, well, we would need to see a good close below this downside resistance line, and then we could aim for lower levels again. But for now, of course, this is looking quite promising, and we could see further acceleration to the upside. Now let's jump into a few pairs now quickly, and the first one I want to touch on is the euro dollar. Certainly, as you can see here, on Friday we had a bit of a down day here, closed the candle in the red here, but overall the pair closed the week in the positive zone, and we can see that on the 20th of September we had a strong candle here to the upside, which actually probably drove, well, kind of played the big role in the weekly gains, the last week's gains, of course. And certainly right now we're going to keep a close eye on this short-term, very short-term upside support line here. Now if this is going to hold, and if this could potentially be a nice bouncing ground for the bulls to kind of start coming in and potentially driving this one back to the upside here. Certainly if you want to be on a more cautious side, you could continue, you could wait for a possible move above the 117.90, or actually even the 118 level, 1.18 level. Now a nice good close above that could open the path towards higher levels. Certainly the ones that we're going to keep an eye on is the 118.40, and of course we do have the psychological 120 zone. Now let me just quickly mark that. So the 120 zone here is also the one to watch if we get a nice break here and a close above the 1.18 level. On the downside, well, I mean, let me actually just jump into the 4-hour chart here quickly, and on the downside here we can see that if we get a nice close here below this upside support line, this short-term upside support line, now this is where it could become interesting for the bears, because a nice good break here below the 117 level could open the path towards these lower levels. Let me just get rid of this one, it's no longer relevant, and we could initially aim for the 116.60, a break of which could lead to further declines. The next potential area to watch here could be this one, this little low here that we had around the 116.15 zone. So something like this could be possible, but again, for us, like I said, to start considering lower levels, we would need to see a nice good break, well, not only below this upside support line, but also a close below this 117 zone, and like I said, this is where we could start aiming for lower levels. But for now, judging by this, for now, because we're still holding on to this upside support line here, and until that is broken, we will have to aim for higher levels here. And especially looking at right now, I mean, you can see that the pair is trying to find its support here near the 117.35 zone. If this actually continues to hold, we could see an earlier retracement back to the upside, where we could, like I said, aim for the 117.90 or even the 118, and then of course if that doesn't hold, we could aim for higher levels. Let's jump into GBP quickly. That's the last pair for today, for this session. You can see that certainly we had a very huge down day on Friday, and let me just jump back into the daily chart. And from the weekly perspective, we closed with a very strong doji here, and certainly it was just closed basically where it opened on the week, and certainly this could be seen as a possible short, maybe reversal sign here on the weekly chart. But of course, let's not get ahead of ourselves too much. Looking at this daily chart, we could see, of course, further the continuation to the downside, but for that to be comfortable with that, we would need to see a nice good break here and a close below the 130.55. This is where we will be aiming for the 130.25, and to be honest, if those two levels, or let's say the last level doesn't hold, well, we could see further declines here, going down here towards the 129 level initially, and dropping then below that towards the 128.70. So something like this could be possible, so be very careful here. As you can see right now, we're just it's just moving nowhere. It's waiting for the for someone to come in, either the bulls or the bears, but to be honest, it's looking to be more bearish rather than bullish. So but to be honest, on the upside, if we actually get a reversal back to the upside, well, keep your eyes on this 130-120 level. As you can see, it acted as a very good area of support. Now it could become nice resistance, but if that doesn't hold, we could see a further move higher. To be honest, for us to start considering much higher levels, we would need to see this one getting back above, not only above this 131.80, but also to be on the more safe side above the 132.15, and this way we could start aiming for last week's highs at around 133 zone, and if that doesn't hold, well, it could open the path towards higher levels. But for now, certainly this is looking quite bearish, and let's see what it wants to do with these levels that I was just talking about, the 130.55 and the 130.25. Okay guys, I'll have to wrap it up here. Thank you very much for watching and listening, and once again, I do apologize for the absence of the videos last week, and hopefully we'll have no more technical issues and we'll continue as normal. I hope you have a fantastic day. Thank you very much, and bye-bye.